Why is gold so popular to trade? Gold has a long history of being traded as a currency and store of value, backdating at least to ancient Egypt. In modern times, gold is typically traded on the foreign exchange market, or Forex, through the use of future contracts or exchange traded funds, ETFs.
These numbers are related to the aptly named future derivative, an investment security that involves buying and selling of an asset, typically a standardized commodity, in the future.
Gold has traditionally been seen as a safe haven asset, meaning that it is often sought after during times of economic uncertainty as a way to preserve wealth.
If you look at every US recession, well, since World War II, you'll see two things always happen. The GDP, the measure of economic output, goes down, and unemployment goes up.
As a result, the price of gold is often inversely correlated with the value of fiat currencies, such as the US dollar, and is sensitive to interest rates and inflation.
After 1945, however, this changed. Currencies were pegged to the dollar, which was pegged to gold at a rate of $35 per ounce. Individuals were no longer allowed to exchange paper money to gold, but central banks were.
In the Forex market, gold is typically traded against the US dollar, and the price is quoted in terms of the amount of US dollar required to buy a given amount of gold. The price of gold can be influenced by a variety of factors, including supply and demand dynamics. This had occurred over here. There was a big level of interest here, which can also be known as a support level. Economic conditions.
With an impending recession, you may assume the government and central bank will stimulate the economy, encouraging investors to leave gold and invest in the stock market.
And political events.
We've got the unemployment report coming out at 9:30. The biggest thing within this is not anymore the percentage employment, but more so the average earnings, which has been the biggest move of this.
Traders and investors can also access the gold market through a variety of channels, including through brokers, banks, and online platforms. It is important to note that trading gold, like any other financial instrument, carries inherent risks, and investors should carefully consider their risk tolerance and investment objectives before entering the market. Why do people trade gold so much in Forex? Gold has a long history of being used as a store of value and a way to protect wealth against current devaluation. As a result, gold is often seen as a safe haven asset that can be provided a hedge against inflation and economic uncertainty.
Gold prices went from 1806 to begin the year to a high of 2039 in the first 2 months. That equates to a 13% return, while the treasury and equity markets were selling off.
Gold is a highly liquid asset and is widely traded around the world, making it easy to buy and sell. This makes it an attractive option for traders and investors who need to quickly enter or exit positions. Straight away, that candle hit our take profit level. You can already start to see some of the differences when you trade Asian session, London or New York. Basically, Asian session has less volatility in the market, but London session has a bit more, and so does New York session, meaning that you could be out of your trade literally in one candle push on a 15-minute time frame. Gold can be a useful diversifier in a portfolio, as it tends to have a low or negative correlation with other asset classes such as stocks and bonds.
What about gold sitting at an 8-year high? Bank of America sees that at a record high this year.
There are plenty of nice places where you can have a little. Equities are tricky to pick individually if you're an individual investor, but there are some perfectly good funds and even one or two exchange-traded funds which hit the spot nicely and can be used. And I think anyone who doesn't have some in their portfolio today is making a big mistake.
This means that it can potentially help to reduce the overall volatility of a portfolio. The gold market is a global market, with gold being mined, refined, and traded around the world. This makes it an attractive option for traders and investors who want to trade an asset that is not being tied to any one particular country or currency. How do we make money from trading gold? One way to make money from trading gold is to buy gold when the price is low and hold until the price increases. This can be done through the use of physical gold, gold ETFs, or futures contracts.
If you've shorted the gold future contract and decide to cash out halfway through, you can do so by taking a long position in a contract with the same underlying asset, quantity, and delivery date.
Another approach to buy gold is when the price is temporarily low, a dip, and sell when price increases, a rally. This can be a more active trading strategy that requires careful analysis of market trends and the ability to identify buying and selling opportunities. Some traders and investors use leverage to amplify their returns from trading gold. Leverage allows you to control a larger portion with smaller investment, but it also increases risk as both potential gains and losses are magnified. Overall, what did we learn about why gold is so popular to trade in the Forex market? 1. Gold is a widely recognized store of value and a hedge against inflation. 2. Gold is a liquid asset. 3. Gold is a diversifier in terms of your investment portfolio. 4. Gold is a global market, which means it's being traded around the world. So guys and girls, I hope this explanation was a good example into why people do trade gold quite a lot and why it's so popular in the Forex market. We can see it has a rich history behind it and has been traded for a long period of time. So therefore it's still in today's market, and this is why we can make money when it comes to trading gold. If you'd like to get into any of my services where I actually do trade gold on a day-to-day basis, you can join my Discord, where I have a free group called Charlie and the Chocolate Factory, where I do put out weekly analysis on how to trade gold, and this is absolutely for free once you do join my Discord, which the information is in the link below. If you'd like to get into how I trade the Forex market, you can join up my one-time fee VIP group. The information on payment for that and also how to get into my Discord again is in the description below, and you'll be able to join my services and trade the financial markets with me every single week as I do trade. So I hope you like this one, guys and girls. Don't forget to like, comment, share, subscribe. If you'd like to see any other videos like this which are explainers based on Forex, then please let me know in the description below. It is your boy Big John, and I'm out. Peace.
Starting from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.